Breakthrough Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. Great to have your company. I'm Juliette Sarli. Let's see how the local market is finishing the trading week. The CBO 200 is slightly firmer there, up by around 0.1%, while having a look at where the S&P ASX 200 is finishing the week. Remember, over the course of the week, we're down, but today just a slight gain of around 13 points, 0.1%, 8,761, but down 0.8% over the course of the week. We saw that there was quite a good gain coming through from the gold players, some of the miners, but a heavy sell-off in IT and in healthcare and also telco stocks today. All right, so let's get into the themes of the day and weekly woes, because even though we have seen a bit of upside today, there has been a bit of a cautious optimism, if you will, and that fall in tech stocks offsetting gains in defensive consumer staples, so really setting us up for a weak week. Tech trouble, stocks across Asia pretty much lower. We've got South Korea's KOSPI down again. The tech sector here coming under that renewed pressure following a sell-off in Apple shares. Also a report that OpenAI may delay its IPO, which has soured sentiment somewhat. And price wars. From July 1, the ACCC getting new powers to monitor whether Coles and Woolies are charging what it considers excessive prices. But look, that doesn't mean the watchdog will be stepping in every time prices go up. And what's interesting is it's just Coles and Woolies because they've got more than $30 billion in sales. So it's not the likes of Chemist Warehouse or Aldi, but the ACCC saying, look, there can be legitimate reasons for higher prices like rising supplier costs or investment in stores and tech. And that has not really weighed too much in on the share price of the two major giants. But let's have a look at what tech stocks did today. Mostly lower, Xero up by 1.5%, WiseTech Life 360, Tech One and NextDC though very much under pressure. Consumer staples, having a look at those. Of course, I touched on the Coles and Woolies stories, both of those higher. Metcash, which was in the news earlier this week, down by some 2%. And then coming back to that Coles and Woolies story, well, JP Morgan actually expects little impact on the big two, saying that Australia's grocery market is actually already highly competitive, doesn't believe Coles and Woolworths profit margins are excessive. Judo Bank, well, it dropped another 6.5% after a record 40% plunge yesterday. Analysts downgrading the stock following that profit warning, which saw it have its biggest plunge on record. DigiCo Infrastructure REIT, though, did well. It rose 4.5% after it said Chief Executive Michael Juniper would not return from personal leave. And we're going to sack who did this chart. It was me. But 4D Medical, not 4DS Memory, is the stock that I meant to put in. It was down about 10%. Of course, it received Therapeutic Goods Administration approval for its CTQV lung imaging software. It has rocketed 1,700% in the past year. I will just bring up what it's actually doing and trap for young players, because I do this a lot and put in the wrong stock code. But 4D Medical, 4DX, actually down 9.5% to $4.14. Let's welcome to the COB, Me Bowie from AMP. Me, great to see you. Shane taking the afternoon off. We appreciate you coming on board. It's been a big week, right? We've had inflation, we've had jobs. How have you put it all together?
Wow, it's definitely been a mixed week for the Australian economic data here. I mean, first of all, obviously, we've had a lot of good news around the peace deal from the US. I know it sounds a little bit like tariffs. With every 2 days, you would hear some new strikes going on or some ships being struck in the Strait of Hormuz. But I think we've ended the week with Hormuz traffic around 75% of pre-war traffic, which I think is very, very decent. Remember a few weeks ago, the IEA or a lot of oil analysts said that it would take a few weeks for traffic to totally normalize. But right now, we're already at oil prices similar to where we were in February, and almost traffic is flowing. So I think all of that is quite positive on the global front. Meanwhile, I think in Australia, the data has definitely been a bit more mixed. We've seen a bit of a slowing jobs growth despite the unemployment rate in Australia holding at 4.4%. That's the same average level over the last 3 months. Meanwhile, I don't think that we've had very good news on the inflation front domestically lately. We've seen a bit of a moderation in the peak inflation rate on the headline. mostly due to the fall in fuel prices as well as oil prices that we have mentioned. But the trimmed mean number has surged to 3.6%, further and further away from the RBA's target of 2.5%.
Yeah, further and further away. So what do you think that means for the RBA then? Because we spoke, I think, was it late last week or, yeah, I can't remember, but I think it was late last week, right? Have you changed your tune on what the RBA does given the data we've had this week?
Well, definitely not the majority in the economist community at the moment. Right now, financial markets are only pricing in roughly a 10% chance of another RBA rate hike in August, and the cumulative probability of any other rate hikes this cycle from the RBA is only around 50%. That being said, though, as at AMP, we are still thinking that there's plenty of reasons why the RBA probably would hike rates at least once more this cycle. And that's going back to that inflation stories. I think the details from that inflation report was actually quite concerning. The RBA has said many times that they like to look at housing inflation as one of the early indicators of where the pressures are. And this month, we saw that new dwelling cost, a proxy for labor and materials in the construction industry, has surged to 0.9% month on month. If you annualize that, that's basically 10% year over year. That's way too high. You've also seen a lot of fuel surcharges in many different industries in the inflation reports, like dining out, even milk prices are increasing because of transport costs. And remember that Australia already had this sticky inflation problem before the war. So while we think that is quite positive on the headline inflation front because of energy costs, the trimmed mean number would probably not get back to target until next year. And obviously, the RBA is so worried about the fact that we spent around 70% around the last 5 to 6 years of inflation above the target. So people probably would have these expectations of higher inflations that would make it harder for the RBA to bring inflation down.
You touched there a little bit about spending. We're still seeing household spending growth solid and wealth rising. I mean, a lot of that tied into the property market. But are you surprised by how resilient some of this spending is?
Yeah, definitely. I mean, if you read the headlines every single day, you would feel like, well, people are doing it tough out there. I mean, consumer sentiment is still basically slumped around the 80s level. Remember, the neutral level is around 100. So I wouldn't deny that I think the cost of living issues are definitely having an impact on certain families. But on the other hand, I think that there are a lot of families are still doing okay at the moment, especially with the spending data actually remaining quite resilient over the month of May. In May, you saw a lot of price rises in hospitality industries like dining out, going out to travels, but spending actually increased the most in these discretionary sectors and not the essential items. And the thing is, the RBA only worries about the aggregate spending. It's not their job to worry about equality or inequality. So given that, they look at this aggregate demand still holding up, the unemployment rate still holding at 4.4%, I feel like they might actually have to be quite hawkish and raise rates once more, at least.
Oh, okay. And, I do get the sense that Michelle Bullock, at least, I go to the press conference every 6 weeks, that she actually really does care that people are doing it tough. But as you say, they have a job, they have a mandate, they have to do what they need to do. It's nearly the end of financial year. Happy EFS. You're probably too young to remember that ad. But tell us what you've been seeing and I guess the impact on market volatility too with tax loss selling.
Oh, wow. I think there's a bit of a seasonality here. There's this famous saying about markets that sell in May and go away. And I feel like it might actually be true lately. Markets have definitely been quite volatile. Obviously, we've been underperforming so much here in Australia, and that seasonal impact is more of a thing in the US. But obviously, over the longer term, Aussie markets always follow the US markets. So, I mean, I do agree there might be quite a lot of volatility in the upcoming months. And I think the danger here is probably even after the midterms when Trump probably has a bit more incentives to go back and forth on the peace deal. Remember that we don't have a nuclear deal yet. Last time around, Obama took 2 years to finalize the nuclear deal with Iran. So it's only been 2 weeks. Obviously, things are not resolved. And I think similar to the tariff issues, all of these noise would probably prop up again here and there.
And finally, Mia, I always ask Shane what's on for the weekend. I don't know if you're a Socceroos watcher, if you watched the game or you're going to watch Netflix or whatever, but what is me Bowie doing this winter weekend?
I mean, it's been so cold in Sydney at the moment, so I've been holding up myself inside. But looking at, spending data, it doesn't seem like Australians are being deterred by the cold at all. It seems like spending is still going very strongly in hospitalities, in dining out, takeaways, and sporting events around the country. And especially with every single pub playing SBS at the moment because of the soccer rules, I feel like it might still be a good month for spending over the coming weeks.
All right. Me, have a great weekend when we get there. Very close to the finish line. Me, Bowie there from AMP. Well, the stock of the day on the call was Judo Bank. Nadine spoke with Mark Gardner from MPC Markets, Adam Dawes from Shaw and Partners.
Could end up being one of the better buying opportunities, but this is not going to bounce back tomorrow. It's not going to bounce back next quarterly update or probably even next earnings. I think this will take a year for them to build back confidence. But if you're a long-term value investor and you're willing to take on the long-term bet and stick your head in the sand and
So you'd say buy some more down here.
Yeah, but
If you're holding
there's
it,
no rush.
And the problem is trust, but it's also the contagion effect. Like, what else is it? It's a cockroach. If you see one cockroach in the kitchen, you know that there's plenty more underneath, right?
Yeah.
And that's the problem with this. It's a sell from me.
Let's have a look at the market leaders on a slightly positive finish for the market. We have seen some really, really good gains coming through in gold players, of course, and that was on the back of that rebound that we saw in gold stocks. I think we might have a bit of trouble with our graphics for the laggards, so I'll just quickly talk you through what the laggards are on the S&P ASX 200. Mesoblast was down 9%, 4D Medical down by 8.8%, Elvera Lithium, PLS and Drone Shield. Let's have a look at the small cap leaders. Solstice Minerals was up by almost 31%. Main Pharma had a good day with 9.5%. And the laggards in the small end of town included OneView Healthcare and Canyon Resources. Looking ahead at what is coming through tonight, we get the US May trade balance and also University of Michigan sentiment survey. Next week, a fair bit on the docket, including what we're seeing next week is going to be the RBA minutes are going to come through. There's also the China data dump coming through and a fair bit in terms of US non-farm payrolls data as well. Let's have a look at where the local market has finished the day's trade. Up 0.1% there on the CBO 200, while the S&P ASX 200 has closed higher by 15.5 points, 0.2%, 8,764. So that is where we finish for this Friday. Have a safe and happy weekend, and we'll be back from 9:45 a.m. Eastern on Monday.